Good morning, everyone, and welcome to the Morning Edge. Filling in for Blake, in case maybe some of y'all might have missed over the last couple of days, or you're just popping in light of the huge, massive events. Blake's on vacation, started today, which times in well with the Brexit, but started today, and then he's going to be out all next week. So I'll be filling him for him on the Morning Edge. Frederick says good morning. Good morning, Frederick. Scott says, Paula, you called it. I didn't believe it, but you were right. Congrats on your convictions. Yeah, well, here's the deal. I thought we were going to get the Brexit, but then yesterday, after all the polls, I just felt like, you know what? It looks like they're not going to do the Brexit after all. And it just goes to show you how wrong the polls were. So, I mean, I thought they were going to do it, but, yesterday at the last moment, I was like, not last moment, but yesterday I was like, okay, well, everything's going towards it remains. So that's it. It just goes to show you how wrong the polls can be. Richard says, last night was the best day in Forex trading ever. I can imagine. Oh my God. Shorted the cable at 49.94 and held that and added all night, then went long. He says, a total of 1,908 pips. What a great job. Holy smokes. He says 152,000. Sheesh. Holy smokes. Yeah, it was oh my God, what a day, what a night. I mean, it was unbelievable. I don't even remember some of the trades I did, and I didn't even trade that much. It was just coming and going like nobody's business. It's just something else. And then I put on that gold short, which wasn't too smart. Holy smokes. I got short at 13.20, I think it's 29. Then I added some more at 13.38. Added some more at 13.49, almost 49. And it goes all the way up to 13.62. Man, I was in deep, you know what. Ultimately ended up making money on the trade. But holy smokes, what a unbelievable thing. But anyway, it was a crazy day. I mean, I don't know. I guess you can ask questions because I was here right from the get-go. You know, when everything started, coming in, it looks like it's going to go for remain. They're pushing it. Cable gets to 150. It backs off. Then it gets back to 150 again. And I think it got up to like the upper 150s, like almost 151. I think almost 151. And then it looks like it peered its head above 150, but didn't make it to 151. But it made another move back up above 150, and I thought, okay, we're going to 152.30. And that's it. And then it's going to fall. Not that I would have traded cable. I was not going to touch cable because I thought it was just going to be just too dangerous to trade because we'd get these massive swings. And sure enough, we got them, but far greater than what I would have thought. But then it's interesting if you were there the whole night. We started falling, and we fell to about, I think around 145 or something like that. And then the market came back. I think it came back to about 147. And I used it was Jeremy Cook, but anyways, world first on the Twitter account, and they go, the market's trading eerily quiet. And I noticed that, and I thought, I go, it's just trading quiet. Not until it started, well, actually right before it started to slip, I thought, what if they're just holding it because they're going to make some kind of a move? But I didn't know what. And then I don't think they were holding it as much as when they started seeing the results. And I was tweeting them out later on, and they're coming in from the different towns or townships, whatever you want to call them. And it just kept on being a little bit more, leave, and then some more leave, and then some more leave, and then maybe one or two remain, but then some more leave. And I remember the cable wasn't even trading. It was trading like maybe in I don't know. It might have been like a 20-pip range, but it was trading like only 2 or 3 pips. It wasn't moving as much. And the news just kept coming out bad. And I do remember thinking, wow, it just keeps on coming out leave, but the market's not even moving. And then I don't know what tilted it, but something tilted it. And holy smokes, man, we just went flying. and then it just started coming down, and then it made it all the way down to, what was it, almost 140, went to the 140s. Actually, that's when I bought Euro. When it got down to 140, I don't think it bought 140 on that crack. And I bought Euro, and I bought Euro literally just a few pips from the low. But it was on the way up. I think I was trying to buy it, and I couldn't get filled. And then I must have had limits ahead, because then it jumped up, and I don't even know how far it jumped up, but I'd already, oh yeah, and that one I got out of the trade. I got out of the trade, which I didn't even add a whole lot. I mean, I made money, because everything looked so crazy. And then the second time around, I don't even remember what the price was. I remember buying that, and it started rallying up real quick, and then next thing you know, I'm out. I'm thinking, what the heck happened? And then when it came back down, I must have had, I don't even know what the heck happened. All I know is I was back long again, somehow, some way, and I had to jump out of that one. And then I traded that again, and I remember going into crude oil, because crude oil seemed to be a lot more liquid. And I saw another report come out negative, and then I thought the price we were at, I don't remember what the price was, I guess it was at 49.40, yeah. And then I said, this is negative, and then quickly crude loses its thing, so I'd already gone short. And then I got back in the Euro again. I tweeted that out. I go, I'm long Euro. And then I don't even know where that one was. And then the gold trade, oh my God, that was a wacky stuff. But we'll get into the charts. But Richard says he made 152,000. Holy smokes. Given what you mentioned about gold, you can review the levels. I am not a fan of gold on dips, but it may be a decent buy for the next few days. That's just Pedro. Yeah, it probably is. Amanda says, hi, Paul. It's such a shame as if you lived in the UK, you would be the possibility had a better understanding of who was running these polls. They all got Scotland left and wrong. And then that evening, the Standard poll yesterday, and I remember Amanda mentioning the Standard poll. Was, in my opinion, daft. Anyway, we have to live to trade another day. I think it was a realization that the margins to leave we're winning by were greater than the poll suggested. Richard says, Frederick says, Richard, time to retire in Mexico. Yeah, man, holy smokes. I mean, I was somewhat prepared for a rally up and then a fade. That was my overall plan. It was crazy. I actually didn't take any action until I was buying the Euro when it was going south of the border. But let's go on and get into the charts. I mean, the news is the news. You know what I mean? So let's go on and move into the charts. I mean, what do you say? After, I guess most of you were probably up during this time, but we had such a massive fall. We did fade in that pink area I kept talking about, but I thought we'd get one more rally. But, all the way down, and this was key area, key support here, the 50%, and eventually we got past that. Initially it held, but we got past that, and look how far we've fallen. Oh my! I wasn't even awake for this part, I don't think. I mean, I went to sleep. I just got up. I got 3 hours of sleep because I was just so tired. But look, we've come as low as almost 9, and had oh my God, almost a 300 pip rally. Then we've now settled back in. I really don't think I'm going to do anything today, especially. I just think it's going to be too crazy on a Friday, and I think the only thing to do would be is if you were literally, forget day trading, you were just scalping. And when I say scalping, it's almost like day trading in the sense in the sense that it would be for a very short term move. But I don't see anything happening now until we get into the U.S. session. Well, into the U.S. session, the volatility's just been unprecedented. I mean, when you look all the way across the board. Well, Lou makes a bunch of political statements. I don't really think, honestly, that that has no place for today. It just doesn't. None of it has anything to do with each other. It really doesn't. And I'm not going to go into that. Um, Today's about the UK and the referendum, not anything else. Doesn't have anything. Look, I will say this. It has more to do with the issues with the obviously with the EU, and they basically what I said early this morning on Twitter was they forced the hand of the UK because of the way the EU's been, and forced this issue, forced it to happen. But but like I said, we've had a pretty good fall from these levels. Now that I was looking at the 50%, the 1038, the six. This is all the way from the low that we had, which was 460. So we've still got quite a ways to go. But at this point, if we take a look at the charts here in the euro, we've come into the middle of the zone, which is 741 to 984, and it's almost unbelievable to even think that. I mean, I remember. Now I remember, this is just like, a couple of days ago, I was looking for a rally here, and I said, I wouldn't be surprised if they rally up in here. Before it's all said and done, you could eventually be in, you could lose 300 pips. Well, that was from, up in here from 14 something, and that would be the best, I was thinking like, 12 or 1151. Not all the way down here. And that wasn't going to be in one night. That was going to be over the course of heading towards the FOMC. But the moves have just been absolutely huge. We're well into the middle of this range of 741 to 984. We have 906 as a level. I mean, when you have these trades on, you're going to have to. That's what I'm saying. Today is very dangerous. You're going to have literally. You're probably going to have it to not get chicken out. You're going to have at least 175 pip stops, and I wouldn't even suggest necessarily trading because we've swung so far. I just think it's going to be a very tough day as far as trying to establish ranges. I don't think you have an edge to trade today. Lou says, yeah, I know. Yeah, I know, because like I said, today's all about that, and it really has nothing to do with anything that goes here in the States. I mean, but I see your point, but I mean, I don't think it's so much that, although someone had made a comment which was pretty good. They say when you look at the overall bigger scheme, that's why you're seeing these things, Scotland, UK, Trump, stuff like that, and, where, but I think it's more important or has more to do, like I said, I've been preaching for the last 3 years about, EU, and I think that's what you're getting here in the UK in its rebuff to leave. I mean, rebuff in the decision to go and leave. The thing that used to get me, and I'll just make this point, is it would drive me crazy over the last, I haven't seen it lately, but in the last 3 or 4 years, if the EU needed money, they'd go in and they would go in and file a lawsuit against Microsoft. They file a lawsuit against Google. So they could basically extract some money. I'm just saying, to me, it just seemed like it's just an excellent indicator of like this. It doesn't have anything to do with the bloated bureaucracy, but the way that they would do things. You see what I'm saying? Is that they made a big point of the thing the UK was saying. They send the money away, but they have no control over it. They send it to the EU, and it's like a few people deciding what they want to go on and do. And I think obviously this has been building for years and years and years and years, and it finally reached a crescendo with that vote. And I think it has more to do with the UK, with the European Union forcing the UK's hand. And obviously the thoughts of that it would be very uh, the risk would be somewhat unknown if they got that vote, obviously did ring true. That's the thing, is that when people are scared, people just get out, no matter what. And boy, do we see that. Um, JT says the number was an indicator of the Brexit. Was that Blake flying? Cable must have dropped 77% during his plane flight. I wonder who's next to leave the Eurozone. I don't even know. Honestly, I have no idea what's going to happen now. I think they may have to try and put themselves back together, because it's, it's kind of like they're in the middle of the ocean, and the ship has a boat has a big hole. It's not going to do you any good to jump off the ship now. Everybody better get all hands on deck and get that hole repaired. I think that's what, at the end of the day, over the course of the next few weeks, I think that's what you're going to see happen, is that they're going to come together. They have no choice, because it's that united we stand, divided we fall. I'll tell you what, if they saw, I already saw about a friend-orandum, I saw a French-orandum, or whatever they call it. I saw on Bloomberg, and there was a French reporter, and she was talking about this other lady in their government, and she's been talking about the French breaking away, and, oh, give me a break. Break away from what? They don't have anything. I'm just saying is that it's a whole different thing with the UK, but if you get too many countries, they're all going to fall down the toilet if they don't get together. So their best thing is to get together, not try and, they don't have the legs to stand on like the UK does. But like I said, I think the thing about making a point about that is that this isn't going to get resolved within, obviously not in a few days, and obviously not in a few weeks. That's what I'm saying, is I think that you're going to see a global recession, at least at the very least a mild global recession. But I think you'll get a decent recession. It won't affect the U.S. as much, because we're in a little bit stronger shape. But this is really going to shake the rest of the globe down pretty good. So I almost say makes me think this is kind of like, I wouldn't say quiet, it's not that bad, almost like a 2008. It's going to be like a mini 2008, where you might end up seeing these wild swings. And why I really don't want to do anything today. I don't see that there is an edge to do anything today. If you look at this move all the way down here, you can say, well, maybe they'll work lower. And maybe they will eventually get down here to the 741. But as far as today, when you look at it, I don't see an edge whatsoever. If you said, maybe they're going to work towards a low, okay, maybe you're right. Maybe they'll move towards, forget 9, let's go right, almost 9. Well, you're going to have to risk all the way back up here to 12. So right now, if you want to try that trade, you're going to have to risk at least about 135 pips if you think we're going to go lower. And the lower is going to be about, probably about 150, maybe 170. The point is it's almost 1 for 1. You're not even making that much for what you're going to have to risk. So these are the levels. We can go and take a look at the levels, but I'll tell you what, it's going to be tough. And I had even moved these from yesterday just in case. I didn't think that was going to happen anytime soon, but you can see how much distance we've traveled, and more importantly, what damage has been done. The key level above the market, you might think it's a 12. Obviously, it is to a certain extent, but to me, the key level is this 1151 zone right here. The bottom of the zone, 1151 to 1255. 1066, as I said yesterday, on the way down, 1066 is the bias pivot. So as long as we're below it, everything pushes lower. If we're above it, we can try and push higher. And they're trying to hold that bias pivot of 1066. Problem is that you might make it up here to 11, and then see the market need to test back here towards this 110. It's going to be tough trading. I'm telling you that right now. It's going to be very tough trading. You do what you want, but I wouldn't suggest anything today, because on top of that, it's a Friday. So people are more apt to want to go on and get flat or get out of positions on a Friday. So I really would be cautious trying to do any trades here. Now that's here on the euro dollar. We're going to move in to take a look here at the cable. This thing is unbelievable. This is what I thought we were going to go to, and I thought we had the confluence of the two fibs. Well, on the remain, then I think that's exactly what we would have gone to, and I thought we would have overshot it, gone to the 50, 198, and then ticked right in here. This what I thought was going to be awesome, right there. Obviously, everything went to hell in a handbasket as we fell down, and you can see these moves were just unbelievable. The swings, and I kept thinking, which is funny. I don't know what is that. I guess it was days ago because I thought if it ever falls down, and I kept thinking in my head, 132.80 would be a good price. Not that I would have ever bought this thing, but it looks like it even went beyond that. But it's funny to think that we got to this 32.21. I thought if it were to fail over the course of the next few days or something, I didn't think everything would come apart in one night. But I thought about that. It was going lower. And I remember when it was coming down here, I think this is one of the times that I bought the euro when I saw it tick down into this 33. But there's no way I had it to go in and buy this cable. There's no way. I didn't. I thought it was pretty much over at that point. That's why I went long the euro, but it was just simply too crazy right now. Dimitri says, "Can you please take a look at the Kiwi?" Yeah, we'll go and do that. Let me do that. Well, you can see here, there was support. Oh, wow, came right to that, 69, 69. You see the touches coming across. Really like that. It really comes in about right there. I do it off the bodies. So you can see it came right there. We'll put this in here. That's why I do the touch. I always go off of the body. I never do it off of the high, the low. To me, how many trades are done there? So I try and do it across the body, so you get a little bit more right there, and then having to coincide right here. That's where they came back to. Above the market, look at the bodies here, right there. 7104 is what I'll be looking at. Obviously, in this kind of environment, it sounds crazy to look at just a few pips, but it looks like it's going to be about 7104, which is going to be resistance. Then we can do a quick fib on this. So we're right up here at the 38%, which is right at 70.95. So we're bumping right now up against this 38%. We're going to mark that off real quick. That way, throughout the week, when we look at this, I'll already have this already up. So I would like, you've got here the 70.95 is going to be the 38% of this range with 71.04 right here. The only thing is that you're going to continue to see the dollar bid. So if you're long, you could certainly go in and take some off the table as we move into this 71 right here. This is actually 71.04. Some decent resistance all the way up to 71.20, which sounds pretty funny to be talking of resistance in a little zone of 20 pips when you've seen hundreds and hundreds of pips trading in the cable, and basically the same thing also in the euro. But that's what you'd be looking at is 71.04. You've got this level here. 70.95 is 38% of this range of 69.70 to 72.98. And then right here, 71.20, basic, yeah, right there. But the thing is even with the Kiwi, the dollar is going to go in, well, bid. You have to be a little bit careful here. Obviously, if we get a little bit of obviously it's responding to the SPUs coming off their lows, and man, they've come off their lows. But I wouldn't, it's going to be pretty volatile with the SPUs. So rally back up here to the 71 on up to about, let's say 71.20 as I indicated. You know what, I would be looking at going and peel off because, I mean, like I said, you're buying the Kiwi, and I don't know about this risk on. But I would, you know what, I really wouldn't be interested in holding over the weekend. But if someone had to put a gun to my head, I would think, all things being equal, is that you're better off looking at the markets from a negative standpoint going into the Sunday session as opposed to a buy. Now let's go in and take a look here. We were taking a look, obviously the cable. Let's go and take a look at the dollar yen. I told you I screwed up my dollar yen chart. Accidentally ended up erasing everything. But this was unbelievable. Now this is what, I wish I would have bought the dollar yen as opposed to, it was the euro that I bought at the time. And it rallied, it did rally. And I came out okay on that one. Didn't make a whole lot of money. I told you, I think on the way down I was trying to buy it and couldn't. And then on the way up, I got long pretty close to the bottom a second time. This time though, it hit some limits above the market. I don't even know what. Honestly, I don't even know where the limits were. Maybe they're 30 or 40 higher. I really don't know. The market was falling, and I was trying to get in. And I guess I should just go on market. I just didn't want to get my clock clean. So on the way up, I'm long, and then on the way up, all of a sudden I'm not long anymore. And then a little bit later on, I noticed I wasn't paying attention. It falls back, and I'm long again. And but that one I actually just jumped out jumped out not at market, but jumped out right where it was at. And honestly, I don't even remember what it was at the time. But the better bet would have been to go long dollar yen just below 100. Because you would have thought, how much further could they fall? And then on the move below 100, you would think that, which they say they didn't. I saw I tweeted out the headlines from Aso, Japanese Finance Minister Aso, and he was saying they did not intervene. But the thought would have been, hey, when it drops below 100, they're going to intervene. So you would have had, somewhat of a bid underneath the market. And man, we saw a hella run back up here. I mean, absolutely huge. I mean, 400 pips. I mean, it's just unbelievable the moves you've seen across FX across the board. But once again, like I said, if you're trying to see what there is or do anything, I don't think there's anything until you get into the U.S. equity open, the cash equity open. I would just keep your powder dry until then if you're hell-bent to trade. And I really don't see anything. If you weren't trading last night or early into the wee hours of the morning, during the European session, which unfortunately I was still up at that time, if you weren't, I just don't see that there's any real opportunity at this point. I just don't. I mean, but if you're hell-bent to trade it, uh, you can wait till the cash equity open, and then we'll see some swings during that time. Joseph says, I can't believe the euro is holding up as well as it is. I think that some of the euro countries have to have referendums on the back of this Brexit. Well, people are going to think that, and you are correct, but after people shake themselves and try and get a little bit, think about what's in their own best interests, I think they have to find a way to put the whole, and I am familiar somewhat, but not that much. I'm an outsider looking in. But I think, like I said, the way I look at the EU right now is it's just like a gigantic hole in the ship right now. And I tell you what, the best course of action is not to jump off the ship. But all hands on deck, and everybody's got to get together and get the ship fixed. And I think seriously now that's not going to be. Forget the popular opinion. That's not even going to be thought of over the next few days or so, couple of weeks. But after that, I think people are going to have to start to think about that. And I think that's the EU's only chance. If everybody starts trying to break away from each other, I tell you what, it's going to be bad news, and I mean really bad news. Even if they were to plan to break away, it's going to have to be way, way, way down the road, like you're talking about, 8 years, 10 years, or longer. Right now, they got to, you got to get home on that ship before you decide you want to break away from everybody else that's on the ship. So your best bet is to get the ship back in ship shape so you can get home. And then when you get home and you've gotten off the ship and you're on dry land, then you can decide, I don't want anything to do with you. The heck with you. Then you can do that. For now, they need to take care. They need to take care of their stuff right now. Seriously. I know that's going to be the fashionable thing to be talking about is all these some more referendums. But I tell you what, that's just only going to exacerbate, and it's going to really cause a real slowdown in Europe. You can see here right now, and this is what I was saying is, look at this. It's dead in euro now. See, look at this. For what, the last hour and a half or so, you're trading basically a 20 pip range, 22 pip range. When you look at, obviously looking at the highs, obviously, but I mean, you're talking about 500 pips. And let's say you had some of these moves, or 150 pips, and right now for an hour and a half you've been trading 25 pips. There's nothing right now. If you're going to look, if you want to survey the market for something to do, which I think you should just wait till next week. But if you want to survey the market for something to do, you really need to wait till the cash equity open. Yeah, Brian says Gilligan's Island song playing in my head. I mean, in a sense, it's like that, Gilligan's Island. I mean, like I said, there's a hole in the ship, and right now it's not going to do any good for everybody to be griping and jumping on the lifeboats if they have some lifeboats. They're a long way away from home. Everybody needs to pull together in that EU and put the doggone ship back together. And I think you're going to see, this is not quite the same, but I think that the action is going to be, if you've traded through that, is going to be somewhat reminiscent, yet on a smaller scale, of 2008. So you're going to see some wild swings, I think, next week, like when these countries take, which I'm sure they already have, but take some coordinated action, you'll see the market swing back higher. Then you could see 2 days later, most of it unwind again. And you have to be prepared for that. And you have to decide in what time frame or time zone that you want to go in and trade, because I think it's going to be that volatile. We can go in and cover the levels as we move into this next week, because I think today is more about people exiting out of their positions or cleaning up the stuff. And Denise says, can you look at the futures? And yeah, we'll take a look at the futures too. We certainly will. But I think today, if you had been like if you ever had like a big fall or major accident, uh, when you first kind of gather yourself, you basically that's what you're doing. You're gathering yourself and you're trying to get your bearings on course. And like, what the hell just happened? You know what I mean? I think that that's the way we need to approach, especially today. And then we go into next week, and then we have the levels, and we're looking at the ranges that we are. Today's going to be a lot of people are going to be shell shocked. Yeah, if you trade the market actively, you're like, well, I already saw what happened. But don't forget, the rest of the globe is going to be waking up to this and saying, what happened? And I mean, people are going to be very scared, and some people may just be saying, you know what? I'll give you an example with the SPOOs. We finally got back there, and they're going like, oh my God, all over again, I'm getting out. And then there'll be even a better push to bonds. So the rally back in SPOOs may end up being rather short-limited, and there's no doubt in my mind we'll have to come back and test the lows. Now, whether we do that on a Tuesday or Thursday of next week, I don't know, but that's in all likelihood what's going to happen as people get risk off. And they probably start moving right into bonds. So we'll go and take a look here in the dollar CAD, and we will get to the futures, and we'll look at other markets. And if y'all want to take a look at other markets, we can certainly do that or recommend that. But we look here in the dollar CAD. Obviously, the dollar CAD was able to rally because the wheels really came off the caboose in crude. Crude got into the 50s. I mean, well, I say 50s, above 50, like 50.45, 50.42. And then when this Greek referendum came down, it just started really coming undone. I mean, to the tune is we got all the way into a $46 handle. So from the highs, we lost nearly $4. I mean, it's been bedlam all across the asset board. But that explains why you've seen this rally up here in the dollar CAD. The next key area for the dollar CAD is 31.31. All said and done, next week, if sometime next week we go to the lows, if we go to the lows, revisit the lows in SPOOs, I would think we'll revisit the lows in crude too, which will allow us to go up to 31.31. My guess is we probably stand a pretty good chance of taking out 31.91. And if we look at this on a bigger basis, it's this 32.18, which is where I think the market will eventually go to. So that we have kind of like today's really kind of like I said, we've we fell on our keister or something like that. We were kind of like saying, what happened? Let's get our bearings. Like, what just happened? Well, I think that we will make it to 32.18 because my guess is you eventually see the equities come back down. They'll have to retest their lows, whether it's early next week or towards the end of next week, like on a Thursday or Wednesday, which will open the door for the crude oil to go lower. Not to mention, when you look at crude oil, now you're going to be thinking, wow, it's going to impact people's thoughts, on the economy. It's probably, businesses are going to tighten, bring in their wallets. And so that's going to create a bit of a slowdown, which you always talking about the recession, which is going to lessen the demand for oil overall. So I think oil will have to go back to its lows, so that'll open the door for the dollar CAD to make it up to 132.18. I'm not saying that we can't eventually go even higher, but I think we'll make it up there to that 132.18. That's how it's all going to feed on itself. Because when the SPOOs eventually and other equities go down to retest their lows of early this morning, last night, what do you want to call it? It's actually early this morning. Then that's going to drag the crude lower. And when the crude goes lower, obviously that's going to drag the dollar CAD. And on top of that, dollar CAD, people are going to go into dollars. So there's your undertone bid. And then on top of that, you've got the oil market, which is going to go in and revisit its lows. When I say lows, last from last night, which is going to be another, dollar and something change lower, will open the door for this to make it up to 32.18. So James says, where does gold go from here? We'll go and take a look at gold. Gold was acting rather well at the time. I mean, even though the news was coming in bad about the referendum, gold hadn't really rallied a whole lot at the time that we're going in. Just for my perspective, we'll look at it here on the 30-minute, and you can see we rallied up to this 1289, and we came right back. So gold wasn't giving you an indication that it was taking off. It wasn't until, and this happened when cable fell down to whatever 140, I think it was like 143.80, and it rallied back to like, it was crazy. It went to like 43.80 and it rallied back into like 47. I mean, I remember seeing like 46.70, and I think it ticked as high as 47. So gold gave back these gains, and the gains weren't that big. But when the lead vote just kept on coming in and coming in and coming in, that's when gold exploded. Now you can see here, gold exploded from here, and I tweeted out, we're here, and I go, we've got resistance at 1323. And it quickly dropped down to like, right after I tweeted that out, it was already tweeting. It already got to, I think I got to like 1324, I think. And I go, there's resistance at 1323. And it was trading at the time like 1322 and a half or something. It ticked down to like about 20 and change. And then it rallied back up. And then it took off. And I thought, man, I'm getting a hell of a bargain. So I stepped in here and I shorted right in here. I think at the time it already jumped up to like 31 or 32, and then it dropped back to like 27 or I think 27 and change. It popped back up and I shorted it like at 29. I thought I was doing pretty good. And I'll be doggone. It did tick up and pull back a little bit, and that thing just rips higher. So I take it on again at 38, thinking, I think it might have maybe been 39, because I think it just hit 40. I'm like, wow, this is it. This is it right here. And I take it on, and before you know it, we're blowing and going, and now we're in the 40s. I'm like, what the heck? So I stop in, and I step in, I think it was 48 or 49. I'm thinking, oh, I can't leave this on the table. I'll be doggone if we don't get about 50. Then it gets to 54. It's actually 52. 50, 52, 54, 52, 55. I'm like, oh my goodness. Then it goes up to 58, and then here I'm like, I'm in a lot of trouble at this point. I thought about adding one more at 1360, but I thought, don't do it. And then I had to ride that bad boy down. And I ended up making money. The last position, I ended up getting out for, I think it was like $1 loss on the way down. I mean, at that time, it was the only position I had. And I thought about trying to run. I go, no, just don't. I thought that they could probably make it to 26. Well, 22 is that market I was looking at, but I thought they'll make it to 26 probably. I said, forget it. Just bail out. So I came out okay. But James says, what do you think gold's going to do here? I think it's going to have an underlying bid at this point. I think what I was thinking last night in the crux of the storm, I thought it can't get too much worse than it did, which it did. But I think it's going to have an underlying bid. What's going to happen, though, I think, is when you see next week, I'm sure, whether it's Tuesday or Wednesday or Thursday, when you see the SPOOs go back to test their lows, you'll see a quick pop up here in gold. And we might get a rally from that area. And then maybe we rally for a few more days. I'm talking about in the SPOOs. And then it retests its low maybe for a second time. That's probably when we see gold blast right through this 1362. Well, although, you know what, on the first run down there, when they take out the lows and the SPOOs, when they do make that run, they will make that run, whether it's a Tuesday or Thursday of next week, we just might go on and take out these highs because there'll be enough of an undertone bid in the market. They know that people will be probably have their stops here. They could hit those. So, yeah, we'll go up here and take out the highs. How much further? I don't know. We'd have to go. Let's take a look at this on a weekly. But I'm not a fan of gold, but I think it's going to be there. So we got a precise 1363. So right in here is going to be some good resistance. See the touches right here, here, and look at the bodies. and this fails right here. So I'd say $14.04. $14.04. That's what I think. And then if you look at it from a fib level, $13.80 is at 38%. So they're going to make a run for $13.80. That's 38% of this move. And the old high was 1920, about 1924, and you got 1404 here. So they're going to make a move for 1380, which is going to be the 38% of this range here. So we'll definitely make it there. Joseph says, "Have you got any thoughts about the yen? Do you think BOJ can keep the dollar yen above 100? They're certainly going to go in and try." James says it wasn't just me who almost lost our lunch on that gold trade. Yeah, I know. I was in deep crap on that gold trade. Holy smokes! I was really pretty much sucking wind when it got to 1360. I couldn't freaking believe it. I came out okay. I guess you can say I kept my wits about me myself, but holy smokes, that was something else. When such uncertainty, why is the yen always bid up the dollar sold? It's just more of one than the other. I mean, make no bones about it. This is the euro versus the dollar. The dollar was bought up. This is the cable. This is a pound versus the dollar. The dollar was bought up. It's just that the yen, even more so, as a risk-off currency. That's all. It's just one more of than the other. They're both being treated as risk-off currencies. And the dollar is traditionally the big safe haven, but people are running also into the yen. And it's been that way for a while anyways. Obviously, the key thing is going to be the 100. It's going to fluctuate back and forth. I really don't like doing anything with the dollar at this point. I thought this is where I got long the euro, and I thought to myself shortly afterwards, obviously when the dollar yen was already rallying, I was thinking to myself, how stupid! You should have just bought the dollar yen below 100, because you know that they'd be expecting the BOJ to come in. And with that, there'd be an underlying bid. So this, I should have bought it below the 100. Yeah, you can look at hindsight and should have. I'm saying it wasn't that long afterwards. I mean, I realized it's come back up and I said, oh my God, why didn't you just buy the dollar yen? Because at the time I went long the euro, and then actually I didn't see it. I looked over and saw that. And I was like, wow, it's below 100. The euro was rallying, but not like the way the dollar yen was rallying. And then that's where I thought, I go, my God, why don't you just buy the dollar yen? Janice says, I pure don't get it. Well, I mean, as I said, the dollar is generally the traditional safe haven. Like, here's another one. This is the Australian dollar versus the dollar, and it's fallen. So they are buying dollars. Now, the move might even be further exaggerated if it was the Aussie versus the yen, although maybe it didn't have that run up against the yen. But what I'm saying is they're both safe haven. One's just even more so. And when I say more so is because you're looking and saying, wow, they're really buying the dollar. You see that here against the euro? Obviously here, but I'm sure against everything else. Wow, they're buying the dollar against the pound. They're buying the dollar against the Australian dollar. And then when you go to the dollar yen, you're like, well, how can the dollar lower? Because it just happens to be they're even rushing even more so also into the yen. Although generally it's the dollar that's the safe haven, but this has been going on for probably about a couple of years or so of more recent where you see a lot of move into the yen. Not saying it never was before, but even more so you see this and you think, this is crazy. Shouldn't the dollar be up? Well, even against the yen, that's just taking a little bit more precedence now as a risk off. And now people view it as a risk off. You'll see lots of times with Blake, when we have the economic reports, Blake will say, okay, let me put up the dollar yen. That'll tell us how they're going to view the report, whether it's bullish or bearish. Janice says, why gold miners rally is hard? Aren't they stocks? You know what, they are. You're right. But the thinking on that, and I don't know how they're going to do. I don't pay that much attention to gold miners. But the thought would be, down the road, you're going to continue to see a greater demand for gold. So people are going to move into those. And it's easier for portfolio managers to go into gold mining stocks versus trying to buy the metal itself. So they're probably looking that we're probably going to enter an area. I wouldn't say an area, an era. I wouldn't say this as big as an era, ERA. But for the short haul, this is what I was saying yesterday. I think that there'll be a recession in Europe. Is that this is going to really slow down a lot of confidence, and it's going to shake people's confidence in financial assets. So people are probably going to feel a lot more comfortable in buying gold or putting a greater percentage of gold in their portfolio. So there's going to be an underlying demand. So that's going to provide a good undertone bid for the gold mining stock. And don't forget, it's not like gold has been trading in the 1500s. Gold has been pretty weak. So it looked like we established a pretty nice bottom in gold over the past few months. So this is finally can give the gold miners and gold another leg up. Like I said, I think we'll definitely probably get to 1400. After that, we'll have to look at as to how much higher. I'm not a fan of gold, but yeah, Joe says the nugget up 27%. But yeah, it's going to be on a bid tone, definitely. We're going to I haven't taken a break, so I'll take an extended break because then I won't take another break. And when we get back, we'll take a look at the SPOOs. I'll put the screen up for the news. And I'll be so over the course of the 2 hours, as opposed to one break per half hour, I'll only take one break per half hour. I'll just take one break, and that's it. But the news is up, and then, like I said, catch ourselves about 12-minute break. So if y'all need to, like Blake say, go to the bathroom, do whatever, and we'll go in and catch on a little bit. And thanks for joining us here on the Morning Edge. As I said, Blake is out today, and he's out all of next week. He's on vacation. He took a hell of a time to go on a vacation because we've seen one of the biggest days in financial markets that you'll see in a long time. Everybody remember this day. And thanks for joining us here on the Morning Edge.